Hey, what is going on, my friends, and welcome back to another video on the My Stock Journey channel. So basically what I am thinking, and something that I wanted to get straight into and I wanted to tell you guys about, is I'm thinking about doing a little series where for the next week or two, I'm posting 4 to 5 times every single week. That's pretty much every single day, maybe skip a day every now and then if I'm just super busy. And I kind of just want to see how it affects the channel. So if you guys start to notice that I'm posting a lot more, it's just because I want to, make sure I'm trying out all the different routes of YouTube. I know you can post once a week, twice a week, 3 times a week, every day. And I kind of just want to see what works out the best for our channel, to see what makes it grow the most and what's going to bring in the best results and get the best feedback from you guys. So with that being said, if you do have any suggestions for videos, if you have anything that you would like to see, leave it in the comment section below. I'm definitely going to need some ideas soon here because it's kind of hard to, just come up with a new video every single day. So with that being said, I do want to get this whole thing planned out and have videos scheduled and, getting made for each day. And so with that being said, once again, leave some comments in the comment section. Let me know what you guys want to see. If you have anything you'd like to see, if any updates or anything like that, if you want my input on some news or some feedback on some news, let me know down there below, and let's get straight into the video. So we are here on my Robinhood portfolio. As you can see, it has been a very weird week, to say the least. Over the last week, we're only up 0.2%. We're only up about $43. That's been going up and down pretty much every single day. Yesterday, at some point, we were up about $152 for the week. As today, we're up about $43. I know at one point for the week, this morning, we were actually only up, we were down $9 for the week. So as you can see, our portfolio has kind of chilled out a bit. Our last month has been insane. We're up about 7.8%, or about $1,350 for the last month. So I knew that at some point our portfolio was growing so much, I was like, it has to calm down for a little while. It has to slow down, kind of regroup, re-get itself back together, and then start going from there. So I do believe that this little consolidation phase where it's kind of just taking a break, people aren't buying too much, people aren't selling too much, it's somewhere right in the middle. And I feel like with that being said, that soon here we should start to see some growth. Hopefully this isn't a tell sign that we're about to start going down. But with everything going on in the market right now, I'm pretty comfortable and confident that our portfolio is going to keep going up. So with that being said, let's take a look at all the stocks that I have and how each one has been affected and growing or not growing over the last week. So we're here on Store Capital, and as you can see, Store Capital has been being really weird for the last week. It has some pretty high ups and some pretty low downs, but it's honestly not been too bad. For last week, we're down about 1.98%, coming up on 2% there. For the month though, we're still up about 11.2%, so I absolutely cannot complain about this little slowdown phase. As you can see, pretty much from right here has been this week, and it's just slowed down a bit. It's not doing too much, but at the same time, I can't really complain about it all that much. In our portfolio, we're up to about 221 shares. Our average cost is still sitting really well at $18.47. Considering Store Capital is at $25.31, that's honestly a really good, average cost. I don't plan on touching that much at all. My market value for Store Capital is at $5,598. And, I put in about 4,000 of that, and I don't really see right now with the portfolio size of mine, me needing to add any more shares. If you can see here, if we go to the 5 years, Store Capital still has a lot of room to grow, and we're already up $1,500 from the little growth we've had now. So I think if we go from where we are now back up to the top, we'll be seeing thousands and thousands of dollars of returns. So I think it's better off for me to start putting my money once again in other places and other stocks and building those positions in my portfolio, because what I don't want to do is make this too big of a position. It's honestly pretty big already. It's at 30% of my portfolio diversity, and that's a lot. Honestly, it's a little bit more than I'm comfortable with. So I definitely want to go ahead and start working and building up some of those other positions and making them, equal out and balance out my portfolio. Next up, we have Apple. Now, if you've been following the news recently, or if you've been following my channel, you know that Apple has been just going absolutely ridiculous for the last week or 2 weeks. Ever since Apple released the news about its stock split coming up here, it's just going crazy. Over the last week, it's up 5%, almost 5%. For the last month, it's up 20%. 3 months, 47%. Now, mind you, this isn't just a brand new stock. This is a stock that's been around for a really long time. This company is not just new. And the fact that they're seeing 20 to 40% growth over month is just honestly ridiculous. I got in around, I don't know the exact date, but I know it was somewhere in the early Julys. It was probably somewhere around July 10th or July 13th. So my returns that I've seen have been pretty phenomenal. I'm up 17% basically in about 5 or 6 weeks. I've invested about roughly $3,000 and I'm already seeing about a $500 return. I definitely cannot complain about that. I have 7.5 shares at an average cost of $394. Considering Apple's at $461, I'm sitting about $60 to $70 over my average cost. So it is kind of hard for me to want to go in and add more positions now, but honestly, I do believe that after the stock split, the price is going to start flying back up again. So I'm probably just going to go ahead, stop worrying about the average cost, and just put my money in and have faith that Apple's going to be able to hold on and maintain a lot of this growth in the long run. I think that it should slow down at some point. If you look at the 1 year, they've just been going absolutely crazy for basically this entire year. So I have a feeling they should slow down at some point, but honestly, based off their 5 year, they could very well not. They could just kind of consolidate for a little while and then continue to rise. So with that being said, I do plan on adding more positions. I would really like to get to 10 shares before the stock split, but I'm not sure if that'll be able to happen just because I do have a lot of expenses going on in my life right now that I have to pay for. But yeah, so 7.5 shares, I'm up about $505. So it's about 17% growth, and it makes up almost 20% of my portfolio. So next up on the list, I have Coca-Cola. So Coca-Cola's honestly not been doing the absolute best as of recently, but it's still doing okay in the long term. So for the last month, it's up about 3%, which isn't horrible. 3 months, it's up about 7%. In 1 year, we're still down about 11%. So there is some room to grow, but it's honestly not a substantial amount that I don't think Coca-Cola can recover. So I have 63.29 shares at an average cost of $45.31. Coca-Cola is up to about $48.14, so there obviously is some room between my average cost and the stock price that it's at now. But I do feel like I should continue to increase my position in dollar cost average, whether it goes up or down. And so with that being said, I would like to see this hit about 75 shares soon, but within the next month or so. I'm currently sitting at a market value of $3,047, and a little bit under $3,900, $3,800 roughly is how much I've put in, because I'm up about $178 or 6%, which honestly is not bad. Every single year, I'd like to see about 7 to 8% growth in my stocks minimum. So seeing 6% already over the last 3 or 4 months is definitely nice, especially if we can recover that 11%, within the next year or so. That'll put me up around somewhere between 17 to 18% for year over year return. And so I honestly cannot complain about that at all. Coca-Cola is one that I do plan on holding on to for a very, very long time. If I was very confident enough to say I will only hold on to one stock for the next 2-3 years, Coca-Cola would definitely be in consideration to be that stock, just because I feel like they're so well established and they've made such a big footprint on the world itself. Everyone knows who Coca-Cola is, obviously. Coca-Cola is in hundreds of countries. They're very dominant and they almost have a monopoly on their entire industry. So that being said, I do feel like they're so well established that it's almost one of the safest stocks in my opinion. We can come down here too. Their dividend yield is 3.34%, meaning that every year on top of the growth that we see from them, we're also seeing a 3.34 dividend yield. Now mine's a little bit higher because I bought the stock price a little bit lower, so I think my divvy yield's like 350 roughly, but it's honestly nice to see. I'm already up 6.2% on my return. So you add that 3.5%, I'm already looking almost at a 10% return on Coca-Cola over the next year. So honestly, once again, I cannot complain. It's definitely a position I want to increase. I think my big goal for them right now is 100 shares. I'm obviously going to take it share by share to get there, but right now I'm thinking 100 shares of Coca-Cola is going to be optimal for the size portfolio that I have. Next up on the list, we actually have Microsoft. So Microsoft is another very big player in my portfolio. My market value is sitting at $2,382 because I have 11.3 shares at an average cost of $199.16. Microsoft currently takes up about 12.9, coming up on 13% of my portfolio, and that's about what I like. I want to see all of my stocks at about 15%. I feel like that's fair, and for the portfolio size that I have, I only want to keep it to about 8 or 9 stocks, so that'll somewhat add up to about 14-15%. I'm currently looking at a return of $127.35, which is about 5.64% of my entire holdings on this position. So honestly, with Microsoft, it's one that I'm taking very slowly. I feel like the growth of them is just going to continue to happen over the next years and years to come. So I'm not just rushing because I feel like they're going to just fly up anytime soon. I think the growth that we're going to see in them is going to be very consistent, as it has been, obviously, from this. Over the last 5 years, their growth has just been absolutely phenomenal and very exponential, as we can see. So I don't see that changing anytime soon. So I'm just slowly working my way up. I have 11.3 shares. And, I'd like to see this hit about 15 shares soon. I think that's a very optimal point for me. That'll put me around 15% of my portfolio. And so I'm going to hold on to them for a long time. Obviously, I feel like with all the upcoming stuff with the school year, all of my classes for college just got moved online. So that being said, we're using Microsoft Teams. And I feel like as, earnings reports start to come out for this quarter we're in right now, it's going to fly through the roof because so many colleges and schools are going on online, and Microsoft is a very dominant player in that industry. So that being said, Microsoft is a very strong part of my portfolio that I think is going to produce very good returns over the next years and years to come. Next up, we have Aflac. Aflac is another very big part of my portfolio. It's about 8.76%. The market value of my Aflac holdings is $1,618. 118 of that is actually going to be returned. So I've gotten a 7.89% return on investment from the 43 shares that I purchased of Aflac at $34.62 on average. Right now, Aflac's sitting at $37.34. It's kind of been all over the place the last week or two. It's down about 4% over the last week, which kind of does sting. But as we can see, it's been kind of up down for the last few months here, as the whole world basically is just bracing, it seems, for waiting for a vaccine or just some really big news. So hopefully we do see that soon. I think we can clearly see that Aflac is at a small uptrend here. It's slowly working its way back up. As you can see in the 5-year, it's just making its way back up slowly but surely, and that's all I need to see from it. I know before the whole crash and everything earlier, the end of last year, it was up about 71% over the last 5 years, which is honestly amazing returns over a 5-year span. It's over 10% on average per year, and you cannot complain about that at all. I think Aflac's going to be definitely a major player in my portfolio, but I don't want them to be one of the biggest players just from my personal preference. I feel like there's some stocks that need to be anchors in my portfolio, kind of like the Aflac and the CocaColas, and then I want to set up like Store Capital and Apple and Microsoft and make those the more major players in my portfolio. So with that being said, I probably won't ever hit 100 shares of Aflac, but maybe I'll sit about 75, and that'll be like my break, my break-even point that I'm happy with. So we'll definitely just continue to grow it slowly but surely. Every week I'm adding a little bit more and a little bit more to these positions, and it's nice to be able to go back and watch these videos and see how much growth it's made from the, I remember when I only had 5 shares of Aflac. So seeing now I have 39 more shares in that now is just, it's great, and it's honestly a great feeling, especially with fractional shares. It makes everything so much easier. But so Aflac is another major player in my portfolio that I'm going to keep adding on to and keep taking in the profits over the long run. Next up on the list, we have Atmos Energy. Now, Atmos Energy actually has not been performing that great recently. My average cost of Atmos Energy is $102.36. It's sitting at $103.37, meaning it's only 60 cents above my average cost. This could be a good time for me to get in right now, and honestly, I do think that's what I will do. I'm at 9.6 shares, and I'd like to buy 1 or 2 more shares while it is pretty close to my average cost. I'm only looking at a total return of $9.73, which is right under a 1% return, which, I mean, honestly, it's probably not that bad, but I guess just whenever you look at some of the other stocks that I own that we've seen some great growth from, seeing only 1% return from them on a $995 investment is not the best, but honestly, I would rather be barely in the green than barely in the red. So, I'm going to keep trying to build up on it. I don't really want to overbuy Atmos Energy right now because I don't feel like they have the growth potential that some of my other stocks do, but I do feel like in the long term they are a very consistent company that have very high potential over the next decades. So with that being said, I'm gonna once again just go ahead and buy more shares slowly but surely. I think sitting around maybe about 15 shares towards the end of the year will be optimal for me. That'll put me somewhere around about $1,600, $1,700 market value, being if they were the same stock price as they are now. Over the last month, they're up 2.5%. The last 3 months, 5.6%. And this year, we're still down about 6.4%. And, that's honestly not that bad. If we look back into March, they were down 27%. So seeing a 20% recovery since then is honestly phenomenal. And I does think that shows the longevity that this company has, and that the fact that they have an amazing management team who will hold them above the water and make sure that they do whatever's best for the company to keep them afloat. And so with that being said, once again, I do believe that Atmos Energy is one of those companies that I'm going to slowly build up on, but it's going to be more of an anchor in my portfolio that kind of holds it down and adds those consistent returns over the long run. Next up, we have Visa. Now, Visa is one of the newer holdings in my portfolio. I have 4.75 shares at an average cost of $194. My market value is sitting at $947.64, so it makes up only about 5% of my portfolio. Now, the thing about it is Visa is actually one of those ones that I do have faith in, especially in the next year or 2 years. I believe that they'll see really high returns. So don't be surprised if you do see that 5% portfolio diversity turn into 10 to 15%. I think after the Apple stock split, I'm going to put the majority of the extra money that I have into Visa and really build up on that position as fast as I possibly can, just because I feel like right now there's a really lot of high potential from Visa. And so with that being said, we're going to go ahead and grow that. I'm at a total return of $20.54, which is about 2.22%. It's honestly kind of low, but it's not that bad, and I'm going to definitely take the returns for sure. We actually did just get our dividend pending in our account, so I'm getting a $1.43 dividend on September 1st, which is a little extra growth there, and I honestly cannot complain at all. I think Visa does have a pretty good dividend. It's 0.58, and so for a high growth stock, any type of dividend is honestly not bad. It's just a little cherry on top. So I would definitely take that. As you can see, Visa for the last week is down only about 0.31%. Over the last month, they're up 1.86%. The last 3 months, 3.78%. And for the year, they're actually up 9.95%, meaning that from where it was a year ago, even though we had this big crash, they've recovered and they've actually bypassed what we were at a year ago. So they're up almost 10% year on year, which is what I love to see. So that 10% return on the year plus that 0.58% dividend is honestly very great growth. I'm very curious to see how Visa does over the next year, especially with people starting to just really use cards. There's a coin shortage in the US right now, so you either have to pay with exact change or you have to use credit cards. And so obviously that would definitely benefit Visa. The more transactions that we have on credit card usage, that that will definitely grow it. And so I believe that some of these companies like the Visas and the Microsofts this quarter, whenever they report earnings from this quarter, I just feel like their stock prices are going to boom. I feel like they're going to smash expectations, and I'm very excited to see the growth of these stocks for the rest of this year. So last up on the list, we have our newest holding in the portfolio, and that's going to be ARKF. Now I have 10.65 shares of ARKF at a $35.22 average cost. The market value, that's $408, so it's only about 2.21% of my overall portfolio. Now, even though this might be the smallest addition to my portfolio that I have right now, it's actually the one I'm the most excited about. Whenever you go look at all the ARK ETFs, you can see just how well they performed. The team that they have there that puts these ETFs together is just absolutely amazing, and ARKF focus more on like the very newer, innovative technology companies, and it's just such an exciting idea to me. And I believe that whenever you look at companies in them such as Square and Apple, you see how well they're performing, and it obviously reflects in ARKF itself. If we look at the 1 year, ARKF's up about 77%. The last 5 years, they're up 90%. And it's honestly just amazing seeing the growth and how much hype is honestly behind them, but it's justified hype. You know what I mean? It's not just hype like, oh, this could be a good idea. No, these are very well-established ETFs that have proven to give returns over time. If you look at ARKQ and ARKK and all the other ones, you see how well they perform, and I don't believe that ARKF has any reason to not do that as well. So right now I'm looking at a $33.85 return, which is a 9% return already. I purchased this stock about a month ago, so seeing 9% returns in a month is phenomenal. The average cost is my average cost is at $35.22, meaning that the $38.40 is somewhere around $3.40 roughly above where I'm at, and I believe that's just going to keep going. I want to keep on averaging my cost, whether it goes up or down. I want to hold on to this and build up this position to be a very major player in my portfolio. I'd like to see 100, 200 shares somewhere in the future, and just a very, it's just amazing. I honestly really love it, and I made a whole video on it recently, but it's a stock that I'm going to hold on to forever. The companies that they hold are just absolutely phenomenal, and the tech revolution's coming. You know what I mean? It's already in play. We're starting to see all the tech companies really take over, and I think ARKF is going to directly benefit from that big change in the society. And last up, we have CLF. Now, this was actually just a stock that I got for free. One of you guys did actually use my link to get your Robinhood portfolio started, and that, like I said, whenever you use my link, I get a free stock, and so do you. So I thank you very much. I think it was Ariana D. So if you're watching this video, thank you very much for using my link and getting your portfolio started up. So we actually did get Cleveland Cliffs. It was a $6.38 stock, but hey, $6.38 is an extra $6.38. In a few days, I'll probably sell this stock and use it to increase my position in either Apple, or maybe I'll put it in a Visa. Maybe Ariana D, if you're watching this, go ahead and drop a comment in the comment section. Let me know actually what you would like to see me reinvest the $6.38 in. I'll go ahead and I'll put that money into whatever stock that's in my portfolio that you would like to see me add on to, and we'll go ahead and we'll get that done. So once again, drop that in the comment section. Let me know it's you, and yeah, let's get that going. So now that we have gone through the Robinhood account, I did just want to take a quick second to go through my Acorns account. So for my Acorns account, I'm at $115.96. We're actually looking at a 3.76 return on that already, which is about $4.20. So I can't complain. Like I said, this is one of those accounts that I just love being able to passively invest in without really realizing the money's coming out of my account. So seeing in the last month, it's coming up on 5 weeks now, seeing it already hit $115 makes me very excited for the future. I think once I hit about $1,000 in this account, I'll more than likely just take the money money out and actually control that money, put it in my Robinhood account, and actually invest that money in the companies that I want to invest it in. That will be one thing that I'm not the most excited about with Acorns, is the fact that I don't really get to control exactly what my money's in. But honestly, the fact that it's so passive and it clearly does work and it clearly can grow your money, I'm not going to complain about it too much. But once again, I think at $1,000 will be whenever I take all that money out and I move it over to Robinhood. If you guys did like that video, drop a thumbs up and drop a thumbs up in the comment section. Okay. All right. Fuck. Okay. If you guys did like that video, smash the thumbs up button. It has been helping our channel grow so much recently. We're looking at 350 subscribers. I remember only 2 weeks ago we hit 300. So seeing another 50 subscribers or about 25 subscribers every single week is absolutely phenomenal. Once again, I do want to post about once a day as much as I possibly can for the next 2 weeks or so, just to see how it kind of affects our channel. So drop some suggestions in the comment section about any videos that you would like to see. I absolutely love making content that comes from you guys because I know it's what you guys want to see. So once again, let me know what you want to see down there below. If you are new to the channel, if you made it this far in the video, let me know. Hit that subscribe button if you do enjoy my content, and I'll see you guys tomorrow. Peace.